Good afternoon, everyone, and welcome. This is the webinar on FinTech for the real economy and how the next generation of payments optimization will support recovery. My name is Aisling Finn, and I'm a reporter at AltFi. As you can see here, I'm joined by some industry leaders who will be able to introduce themselves in a short while. But first, just a little bit of housekeeping. Obviously, we have 4 amazing speakers with us today, but only an hour to chat about all things payments. So please make sure you pop any questions you have for our speakers today in the Q&A box at the bottom of the screen, and we will endeavour to get around to as many as possible. This afternoon's session is part of Innovate Finance's UK FinTech Week, and we'll take a look into the digital payment economy. Today, we'll be discussing how we can prevent failed payments, the rapid shift to digital payments thanks to the COVID-19 pandemic, and what gaps, if any, there are in consumer education about digital payments, among many other topics. I'll come to the first speaker now, Moshe Winegarten, Senior Vice President at Checkout.com, the sponsor for today's webinar. Afternoon, Moshe. How are you today? And can you give me a quick background about your work in payments?
Hey, Aisling, thanks for that. I'm very good. Excited to kind of be back in the office, as you may be able to tell. So I've been in payments about 15 years in product strategy consulting, lots of different areas. I actually joined Checkout about 4 or 5 months ago now to kind of head up the UK and our sales teams. And it's very exciting to be here. I think most recently I was at Visa running their new payment flows, so the new Visa Direct Payout to Card product that's been kind of taking the world by storm. So it's very exciting, and it's one of the products actually we rolled out recently, payouts as well as part of our propositions. It's really exciting to be able to support clients, merchants, as we kind of come out of lockdown, or whilst we're online and now coming out of lockdown, and how they need to do their payments.
Amazing, thank you. And now I'll come to Iana Vidal, Head of Policy and Government Affairs at Innovate Finance. How are you today, Iana? And same to you, can you give us a bit of a background?
Thanks, Aisling. Yeah, it's a great time to be joining this this webinar. So for those of you who don't know, obviously Innovate Finance is the trade body representing the UK fintech sector. When I joined Innovate Finance, I think probably about 18 months ago now, we were encouraging the government to think about delivering a review of UK fintech and thinking more strategically about how we can support our sector. I'm delighted that sort of 18 months on, we've had that review in the form of the Khalifa review of UK fintech, and delighted to hear the Chancellor provide a response, a high-level response from the government on what we can expect to see following that response. Innovate Finance was really pleased to deliver the Secretariat to that, and I'm happy to talk more about it as we go through the session, and obviously touch more on the small thing of a global pandemic that also managed to disrupt a lot of what we're going to talk about today.
Perfect, thank you so much, Iana. And over to you next, Tom Hay, the Vice President of Paytech at All Your Cards in One FinTech Curve. How are you today, Tom?
I'm good, thanks, Aisling. Yeah, and yeah, good to be here. I've been in payments almost since I was a child, so 30 years or more, and done many different roles, both in card payments and in account-to-account payments, with Curve for 18 months, and really excited to be bringing lots of benefits to our customers by, as you say, enabling them to put all of their cards and all of their bank accounts into a single wallet fronted by the Curve card.
Amazing, thank you. And last but certainly not least, afternoon, Gavin. How are you? And can you please tell us a bit about your background in payments?
Thank you, Aisling. I'm excited to be here today, so thank you. Yeah, so I work for Wi-Fi. I'm Chief Marketing and Strategy Officer at Wi-Fi, which is a mobile order and pay company specialising in hospitality, where we help customers order online for in-venue or ahead for pickup and delivery. So as you can imagine, the last year has gone crazy. We did start the business sometime before COVID, but in the last year, the whole industry, as everyone knows, has completely gone on its head. So it's been a very challenging, exciting time for us, with everything going on. So there's quite a lot to talk about in terms of the shift to online and what that's meant for the business.
And that is the perfect segue for my first question. Obviously, as I'm sure you're all aware, this first week has been, well, this is the first week since lockdown has started to ease. what has this week been like for you, Gavin, and how has Wi-Fi coped?
Yeah, it's been manic, as you can imagine. So we've had a huge volume going through. We've got a bit more PR going out today that the first week as a whole compared to the last week before the lockdown has been over 50% up on like-for-like sales. So just comparing the operators that have been open at both times, overall sales are up 50%. For us, it's the same again across everything, and that's taking into account the fact that only a third of our venues are currently open, because there'll be much more opening on March the 17th when indoor reopening happens. But even with that, even with 2/3 of our operators being closed, our overall sales are well up on the week before lockdown, because we've taken more on board. There's more people doing this now. It's been crazy. So the volumes on the first Monday kind of blew us away a little bit, in terms of how many people were ordering, and it's clearly shifting to online, because it's table service, it's people ordering from gardens, and it's just the way the behaviour's changed. So I think volumes overall of hospitality have had a massive week, but people ordering online now for that has taken that even further.
And how did the Friday compare to the Monday? Was it just as crazy, or had everyone sort of settled down a bit?
No, even more so. So we had a big. So Monday was huge. I think it was our biggest Monday ever. The biggest Monday before that was the last Monday before lockdown, because the lockdown happened on a Thursday, and then the Monday people were just getting that last bit of drinking in, as you can imagine.
Habit.
So Monday was mad. Tuesday and Wednesday, a slight drop off, but not too much. Then by Thursday and Friday, it got even bigger. So record sales on Friday and Saturday again. So it's been mad. And but swimmingly for us, it's all gone superbly. So everyone seems to be happy. The online ordering is working. People are getting more used to it. The operators are fully on board with it. And I think it's just accelerating this shift to what is happening now in hospitality, and clearly other sectors as well, as people have become very used to ordering by mobile or desktop for other things, and it's become a natural part of behaviour.
Amazing. And Tom, how has Curve fared in this past week?
Very similar story. We don't just specialise in entertainment and food industry. We're across the board. But we actually saw things picking up on the 11th, before the lockdown was officially over. So we saw a week-on-week growth of 25% on the 11th, and then 30% on the 12th. A bit of a dip during the midweek, but then Friday was 18% bigger than the Monday, and Saturday was more than 30% up week-on-week compared with the previous Saturday. So yeah, overall we're seeing a like 20 to 25% uplift in volume. So yeah, definitely the economy is in a much better state than it was a week ago.
And probably some sore heads floating around too.
Undoubtedly, I think if we look at the breakdown of where the money was being spent, yeah, that tells a whole other story. We saw spend with eating places and restaurants up by 61%, miscellaneous food up by 35%, fast food up by 12%. So yeah, there's a lot going on in that space.
And what about checkout.com, Moshe? How has this past week been? Is it the same story kind of across the board?
I think it's very cool to see the uplift in spend. We have a lot of providers who kind of bringing the convergence of digital into the physical world to now lockdowns ended. Like Wi-Fi we're doing, we're bringing out this, we're seeing kind of the food and beverage and the hospitality spend uplift. But I think what's interesting to note is there hasn't necessarily been that dip in the online spending. So people have been spending online, that's still there. I think, although everyone's been back to the shop, so when you move out of hospitality, you look at the retail sectors, I think at least at the beginning, it's going to be a lot of stuff people didn't want to buy online, might have been saving up, they might have been wanting to go to the shops, kind of try some clothes on and things like that. So I think it's just been an overall lift all round, and it hasn't really been a shift from the online to the offline. It's just more kind of some of that business which has been missing has now come back. So it's overall then good for everyone, good all round.
Amazing. And Iana, Innovate Finance has a pretty unique perspective. It's kind of got this bird's eye view of the whole industry. Have you seen companies raring to get back, or is there more wariness?
I think, you know, as the others have said, it's sort of the pent up demand really that we're seeing, and this is, you know, we've got a number of members like Curve and Checkout who are in the payments business, and they've all found that we've seen a lot of growth. You know, we've seen a lot of stats, really exciting stats out from a number of fintechs over the last couple of weeks. I mean, I personally went to get to my hairdresser and then to the pub on the weekend, so I was really pleased to see things opening up again. But I think, you know, it's really important, as Moshe said, that actually when you look at what's happening online as well, when, you know, you're not really seeing that dip. And I think there is something about the way that, you know, this period has transformed the way people think about digital finances, that means that actually the genie is out of the bottle, and I don't really think we're going back. You know, last year, in the first month of lockdown, 66 million people downloaded a banking app for the first time. So that's a whole new group of people who weren't really engaging with digital finances before and now are. And that's a whole new group of people that SMEs, whether they be small restaurants or independent retailers, are being able to capture this audience now. So I think it's, you know, it's a positive start, and hopefully it can continue.
Amazing. And sort of widening out the lens a bit, just as you've done, 2020 has been the year of e-commerce, as we were all locked in our homes, unable to actually go to physical shops and having to shop online. And I'm pretty certain that I did more online shopping in 2020 than ever before. What trends did you see coming out of 2020 and sort of into 2021 as things are starting to get back to normal, Moshe?
Sorry, I was stuck on mute. So I think it's a little bit of old news. Every kind of when the lockdown happened and everyone kind of moved onto e-commerce, everyone talks about the McKinsey stat of kind of the growth of 20% kind of growth in a matter of days, etc. But I think what's been really interesting, and I was chatting to Gavin about this previously, is as we move out of lockdown and people come back into the stores. But this digital behavior, and I just mentioned it before, kind of the convergence of the digital and physical, right? So people are taking that digital experience, the card on file. So you kind of got Apple Pay, Google Pay, and kind of the kind of really slick experiences which they've come to kind of know and love and just kind of integrate into their lives, and they're bringing that back out into the stores. You know, I talked previously with a client of ours, Farfetch, and kind of what they were doing is bringing the in-store experience into the digital world during lockdown. They kind of had to replicate that. They had the salespeople in store kind of helping their clients, but then and now this is the reverse we're seeing happen, and kind of partners like Wi-Fi are really kind of bringing that into the store, bringing all the data that you'd normally have in the online world, online merchants benefit from, you know, into physical premises, and I think that's something which we've seen. You know. Partners like that were around beforehand. Wi-Fi had been around for years, but I think Gavin could probably share what the difference lockdown has made, and as we come out of it, and the adoption that's had, and you know, across the demographics.
Perfect segue again. I'll go to you, Gavin. I mean, obviously, Wi-Fi deals with so many people that have had to pivot so quickly to digital payments for both in-store and online. So, what has your experience been?
Well, yeah, I mean, as Moshe says, we've seen, as you'd imagine, a huge shift to it. And we did some research recently to look at how behaviours and attitudes towards online and mobile ordering has changed in hospitality since the beginning of lockdown. And we found some big shifts. So as the pandemic started, you know, it was around 2/3 of sort of 18 to 34-year-olds were looking at, you know, ordering by mobile. But that dropped down quite a lot after, you know, when you got certainly older audiences, and now we're up at that level across the board. So, you know, even over 60s, over half of those would be, you know, open to ordering by mobile. The same number again across the board say that, you know, they're not planning on stopping using it. Now they are using it. So 2/3 of those currently ordering online, ordering by mobile for ordering ahead or ordering to table in hospitality venue would now continue doing so. And 80% of operators, and I think this is the key bit, 80% of operators are looking at continuing to offer that service and pushing it out as their often as their core solution, their core ordering solution. And that's where the change is actually going to come from, as much as from consumers, because for consumers it's about familiarity. You know, as long as they feel comfortable, they trust it, they know what they're doing, and there's this, you know, you're not walking into a venue and going, you know, what's this? I'm only used to ordering with a waiter, for example. Once they're familiar with it, the onus is then down to the operators to make sure that experience is great and that they're pushing it, and that, you know, if you walk into a venue and they say, oh, to order, sit down, order by your phone, people will do that. And the operators will now start to do that because they're seeing huge benefits from it. Because at the moment it's been pushed clearly by the pandemic and social distancing and all the rules in place, but they're seeing that, you know, they're selling more. It can increase sales by 30% by ordering online versus in person. They're getting faster table turnover. They're getting efficiencies with their staff. So as those benefits come through to businesses, particularly small businesses who wouldn't have had this before, because, you know, it's like McDonald's and Starbucks, the smaller operators who don't have IT departments and that experience internally were not really able to do this, and it's forced everyone to kind of make this available and democratize it for all. So now we're seeing operators pushing a solution, understanding the solution, being very comfortable with it. Then I think the people that are saying they're going to carry on using it, you know, I think that's just going to grow. It's now kind of, you know, the genie's out the bottle now, and it's about how to make that the best possible experience.
So in your opinion, pub, restaurant apps, they're here to stay? Yeah,
I mean, any kind of sort of that digital technology, clearly, yeah, it's gone so far along now, and it's about, you know, making that experience the best possible and the easiest possible for customers, and it's moved on leaps and bounds, so definitely.
And Iana as well, same question to you. Would you say that from your perspective, it looks like digital payment apps are here to stay?
Yeah, absolutely. And I think I guess one of the exciting things about that is that the government is really keen to use this moment to really bolster the UK fintech sector as well. You know, like, it's sort of widely known that the UK is a global leader, and I think especially in payments because of so many of the innovative companies that we have here. And I think the government sort of sat up and had a look and think, hang on a second, we've got something really great here. How can we make sure that we're investing in it? I think, you know, what Gavin says about, you know, people changing and being open to change is so important, because I think that the pandemic has allowed people to be more open-minded. We're all, you know, washing our hands more frequently. We've all got 5 million hand sanitizers everywhere we go now. Like, this is a moment where you can say something to somebody that they perhaps haven't appreciated before, and you can say, and here's how we're going to do things differently. And they'll say, yeah, sure, because the government and health officials and others have been telling them for the last year, we're going to have to do things differently for these reasons. So it's you know, to use a cliche, it's a teachable moment. And I think this idea of sort of finding a smarter way to pay, if you're an individual or a consumer, or to take money and to sell your services if you're a business, is sort of, it's, you know, it can only grow. And I think the government throwing weight behind it through the Khalifa review and through other sort of interventions and reforms in the market can only be a good thing, because this could really be a jewel in the crown for UK fintech.
Amazing, thank you. And obviously with digital payments, there are some issues that come along with them. I mean, in 2019 alone, the digital commerce economy lost $2.2 billion of consumer money in failed payments. With it being such a huge issue, what can we do to help prevent failed payments, Moshe?
Hi, you got me on my favorite topic. It's a great question. I think it's where payment providers can really differentiate themselves and help merchants, help the customers in the whole experience. So there's a number of reasons why payments can be declined. So if you go through it, lack of funds is an obvious one. And there I think it's number one, if it's genuine lack of funds, let's get the information straight way through to the merchant, through to the customer. I think there's like a huge percentage of merchants who don't even get the information of why a payment's been declined. So I think finding a way to get that information through to the merchant, and then go, hey, you know, your card company says it's declined because there's not enough funds. You know, I think often I've been at the till, or I've been shopping online, it's declined. You're like, panic, is it fraud, or, you know, what's happened? So getting the information, getting a reason, and kind of explain to the customer, it allows them to kind of try a new card or things like that. You know, if it's genuine, if it's general online shopping and things like that, then it's, as a merchant, you go, okay, there's insufficient funds. There are new kind of providers out there on the market for buy now, pay later, kind of buy it in 3, so you can kind of break the purchase down into bite-sized chunks. Companies like Klarna, kind of offering that and have those options there. So you kind of, I know what's been declined, insufficient funds. Hey, here's an alternative option for you to use. And then there are things like a lot of the times you have your card on file, right? We all know that, Amazon, you kind of have my card details on there, or you have recurring payments or things like that. And there are services you can plug into from Visa or MasterCard, kind of account updater. So if your card's just naturally expired and been refreshed, the right payment provider can kind of capture those details and switch it in. So kind of, again, to avoid that horrible decline. And again, there's another thing, called token requester. So even if it's been, lost, stolen, you kind of reported lost, stolen, in the middle of the month, being able to get those updates immediately from Visa or MasterCard or whatever network you're on can prevent those. So kind of that's in the insufficient fund space. And now with all the new regulation coming from strong customer authentication, so you might have experienced that now, but started to experience that where your issuer sent you a little text and kind of with a code, a one-time password to do. So this is kind of unverified customers. So making sure that we put in place 3D Secure 2.0, kind of the new security protocols in place, passing those through again, so that your issuing bank could send you a password if they needed to. They've got the information. Again, key to kind of remove it, kind of reducing those declines. There's interesting stuff about the fraud triggers. So you can, helping merchants optimize their fraud rules. So, choosing to decline merchants, and sometimes if it might mean too lax, they might tighten it up, but then issuers are slightly wary and they start declining them. So kind of working with a partner kind of to advise you, getting it at the right level and balance, sometimes even tightening it a little bit more so that, the card issuers have confidence that you as a merchant are not sending through bad customers, is important. And then there's things like, if you're an international merchant or business, you might be working with a lot of cross-border cards, or you might have customers in other countries. And again, you tend to find slightly higher declines if it's cross-border, if the merchant and the customer are in different countries. So working with partners who can actually put in place local acquiring, that, again, in France, the French banks would, much prefer to kind of accept a payment, or they'll give a slightly higher acceptance rates for a merchant or an acquirer who are processing that locally than internationally, just because they know historically there's been higher fraud rates when it's cross-border. So lots of different areas, highly complicated subject, but a lot of things we can do and really kind of work with businesses and merchants to understand what's happening, what's going on and why. And I think the key part to it is really getting hold of the data. So maybe immediately you can't do anything, but like after a period of time, get hold of the data, request the data from your payment provider, and say, and then drill down into it and go, what are the decline reasons? Some of them you can't, might not be able to change if it's a stolen card, but sometimes it's, there are things you can do, definitely.
And Curve recently became a Checkout.com customer after its previous payment provider failed, shall we say. So I can imagine that you have a unique perspective on this topic. So Tom, what would you say we can do to help prevent failed payments?
Well, definitely, Aisling, yes. As you say, we were with Wirecard up until the middle of last year, and they failed dramatically. And so we had to make a move literally over the course of the weekend to a new acquirer. And luckily we were already talking to Checkout. And so we made that technical switch over. It was a great move, I've got to say, because our decline rate has literally halved after we moved over to Checkout. So all of the magic that Moshe was just talking about, it really does pay off, and we have seen the benefits of that. So that's on the merchant side, where we're acquiring funds from customers' bank cards. On the other side, where Curve is the issuer, we've also put some, we think, quite innovative measures into place to cut down on declines. So one thing that Moshe talked about was insufficient funds, which happens to everyone from time to time. But if you're in the supermarket or whatever, you do get flustered and frustrated. So we've put in something which we call the anti-embarrassment feature. If we try and acquire funds from one of your cards in your wallet and it's not sufficient funds, we will immediately try and get it from one of the other cards. So it kind of halves the chances of you getting one of those insufficient fund declines. So that's one way of reducing declines. We have put in place messaging to say why the decline has happened if the customer does get a decline, so they can take whatever action is appropriate. In cases where the funding card issuer responds slowly, we've put in what we call a stand-in capability. So based on your previous purchase history, if you've got a good history, then Curve will temporarily sub you for that transaction and collect the funds from your card later when your issuer is back in action again. And we're also looking not just at has this customer had a decline, but at what point in their life as a customer. Because if someone has just joined Curve and the first thing that happens is they get a decline, that's probably it. The Curve card is going into the bin. So we look very, very hard, and we've got an AI-based model called Cube, which will look at customer behavior, and it will predict if something nasty happens to a customer when they're early in the life cycle. We will proactively reach out to them, explain to them what happened, explain how it can be avoided in the future. So yeah, we are taking some quite, I think, proactive measures to prevent those declines.
Amazing, thank you. And Gavin, I'll come to you next. Obviously, again, we've spoken about this, but Wi-Fi is kind of at the forefront of a lot of these transactions. So do you think more can be done to help prevent failed payments, or are they just sort of an inevitability that we can't avoid? You're on mute. Phrase of 2020, we've already got it in.
No, I think it's it's definitely not inevitability. You can bring these things down, but I think as Moshe and Tom were both saying, it really comes down to communication a lot, and working together to minimise not just the failed payments, but also to understand why they happen, and make sure that customers don't get frustrated. And businesses that are offering these services that are moving into online often for the first time because of what's happened, is to make sure that throughout the process people understand what's going on. So in terms of minimising the actual failed payments, there's a number of things, but I think at the moment we're seeing a big push to Apple Pay, and that comes with sort of natural security, a more frictionless process, so both Apple and Google Pay. But we've seen in the last week, we've seen nearly 50% of our payments now going through Apple Pay, which we haven't seen anything like that before. That's really, even from before lockdown, that's grown a lot. And it may be some of that is to do with the kind of venues that have reopened at the moment. There's a lot of pubs, beer gardens, younger people going out a lot more, that are naturally more inclined to have Apple Pay set up on their phones than the older groups. But there's definitely a move towards that in general. So that's probably going to naturally help payments go through a higher level. But then in terms of what happens when it goes through 3DS and might have issues, there's a whole sort of, for us, there's a whole number of reasons that an order and a payment may fail. We work really hard to minimise that, but I think the education for the operators and how they educate their customers is absolutely crucial, because I'm constantly surprised that when we get operators come on board with us and they ask about what we do, they ask about pricing, they ask about what's the experience like a little bit, and how fast they can get set up and that kind of thing. But there's very few questions about payments, about failure rates, about how this works in terms of what happens if their customers get that. And I think there's a big education piece that operators across any industry, if they're moving things online, is that they understand what that end-to-end process is, what the communication is with their customers, that everyone understands what's going on, because there's ways of setting this up. There's a lot of people who've entered the market now to provide online payment services who won't naturally be using the best PSPs, they won't be integrated in the best way. Our work with Checkout has been a huge amount of integration work to make sure that we cover all of these things to minimise risks, but also to improve the communication if anything does happen. If customers are going into venues where operators haven't set things up in the right way, they haven't questioned it, they haven't queried it, they don't quite understand it, you're going to get customers coming in, trying to order something, it doesn't work for a number of reasons. It might be payment failure, it might be order failure, whatever. As Tom says, if that customer's first experience with kind of online mobile ordering is that this crashed, it doesn't work, they'll walk away and they won't come back. And it's just going to slow things down as to what is an inevitable move towards where it should be, but it's going to lead to a lot of frustration. So I think it's on the likes of us to work with our partners and our operators to kind of really help educate the industry as to what comes with online ordering, and it's different to cardholder present stuff. So it's communication, I think, is absolutely key across the board, in short.
And so I guess in short, education is one of the most important things that we can do to help speed up the whole process of digital payments and ensure that the adoption of digital payments is as seamless as possible, given that it's going to be here for a long time now. And I just wanted to remind the audience that don't forget to pop any questions that you have for any of our speakers in the Q&A box, and we should get to them hopefully in about 15 minutes or so. We kind of touched upon this briefly about like Apple Pay and Google Pay, and they are limitless, and in the sense that they don't have the same limit on them that you do when you just tap your contactless card. Iana, do you think that there needs to be, did you see a need for the £100 contactless limit, and do you think there needs to be tighter regulation because of it, because there could be fear of fraud or other things going wrong when you have the £100 contactless limit?
Yes, it's a good question, and I think the raising the contactless limit, I think obviously initially to £45, and then obviously with the consultation that's just come through from the FCA and the government's announcement, it will be increasing to a little bit higher. I mean, it puts us in on the same plane as other markets. When I go to Australia, you can spend on contactless up to $100 or whatever. Like it's normal for those sorts of markets. So I think it makes us more attractive in terms of our international competitiveness, so to speak. As others have said, like Moshe, etc., there are now, as well as the innovations that we're seeing in the market, there are now obviously more initiatives and measures to make this as safe as possible, like strong customer authentication. And I think fintechs are leading the way in actually providing as much sort of safety and stability and security for customers around that. I feel very safe using my Challenger Bank app to pay for things, and to know that if something was going wrong, that I'd know immediately because I get notifications. And actually I know that they're working seamlessly with providers like Checkout or like Curve or like others on the market to make sure that if something goes wrong, they know what's going wrong, and I know what's going wrong as well, and we can work together to fix it. So I think there's definitely, it helps the UK to stay competitive. So I think there's definitely a place for things like increasing the contactless limit. And I think as we become more and more comfortable with this way of paying, it will show that the demand is out there. Things like the food shop, for example, on a weekly basis, a lot of people probably would quite like to have a little bit more room there in sort of the £45 limits. Actually, that should become seamless for many people, and I think it can only be a good thing that the government and regulators are looking at this. And as I found out recently, one of the small benefits that we can take from our new place outside of the EU's financial services regime following Brexit, is that we can do things like this now and forge ahead of our peers in that sense.
And Moshe, as a digital payment provider, what are your thoughts on the £100 contactless limit?
I absolutely, completely agree with you, Iana. It also comes down to education, right? So there's this fear, a little bit of tabloid fear mongering on the whole thing. But if you think about it, it came in at, I can't remember what it was, £10 in 2007, then it slowly crept up to 20 or 25, and then 30, and then in the pandemic jumped to 45. Now, the people who were rightly scared were the banks, because the banks are taking the liability. If your card used contactless and it wasn't you, they kind of immediately kind of credit back, because there's no PIN, right? When you do a PIN, if it's a PIN transaction, they kind of go, well, it's likely to have been you unless you gave your PIN away. When it's contactless, they kind of know that they've enabled this feature, and in order to kind of protect the customers for this exact scenario, kind of they take all liability. So the banks are always nervous on this feature, and they slowly crept it up, and they worked with the schemes. And then the whole push was, well, hey, £10 doesn't really cover the tiny percentage of in-store cash transactions, and slowly, 45. And I think the £100 kind of price point is perfect to cover the vast majority of in-store transactions which were traditionally done via cash. And I think, as Iana said, it's really important to point out, this is, the UK is not kind of doing anything crazy. In the US, it's set at $200, the contactless limit. In Canada, in Australia, as you mentioned, it's at I think $200 Australian dollars actually, which is about £112. And in Canada, I can't remember, it's I think it's about 250 Canadian dollars. Again, it's about £143. So it's out there, and people have got to bear in mind, this is because the schemes, Visa, MasterCard, the banks themselves have kind of risk assessed this. They kind of know those risks, and they kind of understand those, and say ultimately it's a benefit for consumers, right? If you don't have cash on you, you can speed at checkout, you can tap the card, you can go. So it's a great thing to bring in, and I think yes, it's precisely. And the UK has been enabled to kind of be innovative from a regulatory perspective. Brexit's kind of freed us a little bit. So if you think about it, the £45 limit that came in the pandemic was a bit of a weird number. If you're wondering, what it was based on was because European Central Bank exemption on doing strong customer authentication, so doing an extra check, was set at anything under €50. €50. The kind of, when you put the exchange on that, it's about £45. So kind of to be exempt, UK had to be at £45. But now kind of we can kind of set our own limits, own exemptions. It could be moved to £100. But what's really interesting, I think we chatted about this previously, was another education point. So a lot of the papers and the press came out saying, oh, it's moved to £100, and they had a whole discussion. And for most consumers, I think most papers, that's all they reported. So if you went out there and tried it, it wasn't going to work, because you need I think the schemes have probably worked, had a line to it, but you need, the issuing banks to set it up. You need the acquirers to set it up. You even need the stores maybe to configure terminals. There's so many, and not all issuing banks are going to do it at the same time. So there's so many kind of moving parts to it. I don't think we've actually seen. I haven't heard of kind of people being able to do yet successfully doing £100 at the point of sale. But I think, to Tom and Gavin's point before, consumers probably tried it and said, well, that's a rubbish, right? It doesn't work, which is really terrible. So we have to educate consumers on, hey, this has been thought out by a lot of people with big risk teams, and banks paid for it, and it's pretty safe, and if anything happens in the worst case scenario, you're covered. But then also, hey, let's manage the messaging that's gone out to the public, and this will come in due course, and and when it does, it'll be a great thing. And again, ultimately supports customers. I think in the pandemic, people were a little bit nervous of touching physical cash. We heard a lot about that probably a year ago, and that's why they moved to £45, which was really, I think, well received across the continent. And I think here, coming out of lockdown, and I think we're ahead of a lot of the countries on the continent are moving out. I think people will ultimately enjoy the benefit of being able to kind of pay how they'd like to pay. So overall, good thing.
And do you think that the limit could go even higher? Is there even a...
Never say never, right? Never say never. But I think, I suppose there will be inflationary rises, right? In the sense that, maybe 20 years, whatever it is, the price of goods go up, so then the average transaction value would go up, and maybe that needs to move. But possibly before that happens, almost all those context transactions will move onto device, right? As you mentioned, right? AltFi, Google Pay, which already, because they've got the biometric authentication and they've got that extra level of security, they kind of don't have this cap at all. So by the time there's a kind of burning need to increase, will most of contactless move onto like a phone away from the card? Probably, and in which case the point probably becomes moot. So I'll say never, but I think it's as everyone goes more to mobile payments, they'll become irrelevant.
I mean, as a die-hard Apple Pay user, and slightly embarrassed fintech journalist, I did go into my shop and try and pay for something above my £45 limit, and it didn't work, and I haven't tried it again. So yeah, if you wanted a case study, me. Tom, I saw you raised your hand. Did you have a point to make about the contactless limit?
Yeah. So following up on Moshe's last point, really, we see the contactless transactions both card-based and device-based. The device-based, there are very few transactions above the 45 limit, but there's, I think, only 3%. But those transactions that do exceed that limit can go up to very high ticket values. So we see individual Apple Pay or Google Pay transactions of several hundred or even low thousands of pounds. So people definitely do have a desire to pay in this contactless way, and you do have to have strong customer authentication on a per transaction basis up at those levels, obviously. One of the quick plug for Curve here, one of the benefits of Curve is not all banks, particularly in Europe, not all banks have enabled their cards for Apple Pay or Google Pay. If you put any card into the Curve wallet, then because using the Curve card as your card, you can use that, use your device anywhere across Europe, even though your bank doesn't natively support XPay. So yeah, definitely a demand there.
Amazing. And sort of a slight pivot, I guess. This webinar is all about digital payments, but how can we ensure that financial inclusion is still at the forefront of our minds when we're talking about this? I know that there were some articles that I think were largely scaremongering about some people, pundits, being excluded from the pub because they couldn't pay because they didn't have a mobile phone that was enabled for the internet or a smartphone or whatever. So Gavin, I'll come to you. What can we do to ensure that financial inclusion is still one of the most important things when it comes to digital?
It's a vital issue for still a big segment of society. You don't want people to be going into venues and feeling that they are excluded. I mean, we've got a range of customers. Somewhere it probably wouldn't be an issue. Like one of our we've had a huge number of transactions this week. It's the likes like Box Park in Shoreditch. You can have most people there who have smartphones. They have you do pay by mobile there, and I don't think it causes an issue. If you've got it in community pubs and people wandering in and they don't have a smartphone, you can't exclude people. It's just a general kind of society thing. You need to offer both. I think as Moshe says, it will become a moot point in future. The same with moving to Apple Pay and what that means for the limits on contactless payments. In the same way, as generations grow up, smartphone usage will be so natural that I don't envisage there'll be many, if any, people going forwards in 20 years' time that aren't used to having some kind of smartphone technology. But until then, it just makes total sense that you have both options. And having a mobile online ordering solution in place doesn't mean that you have to negate everything else and say, that's it. So it just seems common sense to me that if you've got customers who still want to be able to pay another way and they have no other way of doing it, you can't rule them out. So yeah, I think they made a big deal about it because that particular operator got that wrong, and didn't make it, didn't make it available to everyone. But we've not had that issue within our customers because they're balancing it out.
Mm-hmm. And Iana, kind of the same question to you. Obviously, fintech is a disruptive industry in itself. So how can we ensure that we don't sort of leave the ones that we are meant to be there to protect behind when we move towards digital payments?
Yeah, I mean, I agree with Gavin that actually it's sort of, educating or ensuring that businesses have a range of options available that are appropriate to the customer base that they're serving. We're not going to be in a position where even within 5 or 10 years' time, everybody will just be paying through their smartphone or some other version of technology, because there are a significant part of the population for whom that's just not possible. So actually, I think maintaining the various different options for payments so that people have that access is great. And I guess one of the reasons why fintech is so good and why our payments industry is so vital to this is that actually what's happening here and what's happening with businesses like Checkout, who who are innovating in this area means that they are looking at increasing productivity and effectiveness, innovation all the time, and that is helping businesses to do better. And it means that actually it's building an efficiency to the whole payments options that they're providing. And as long as you can look at that, and you can make sure that you're providing that option for the people who want it, whether it's paying with Apple Pay or any others, but you're also still accepting cash, or you're accepting other forms that are supported, then that will happen. So again, I think, and I think the government is very aware of this, of wanting to maintain access to other forms of payment for those who want it. So I definitely think it's about the sector looking at how we can support and be responsive, I guess, to things that we can do in the digital world to support that, but while recognizing that it's not going to be right for everyone right now.
Mm-hmm. Amazing. Well, I think we're just about perfectly on time to jump into some questions from the audience. We've had some coming in, but again, don't forget to pop any more that you might have into the Q&A box, and we shall hopefully get around to them. So this is a question that I think you'd be perfect to answer, Moshe. It's, are card schemes your direct competitors? Obviously, as a digital payment provider, you can sort of do one half of the equation, but would you say that, and also you used to work at Visa, so having seen both sides of it, what would you say? Are card schemes your direct competitors?
No, not at all. So good question. They're different. There are two different types of card schemes out there. So if you kind of don't have time to go into it on this, but you can look up a 4-party model and 3-party model. So your traditional schemes like Visa and MasterCard rely on acquiring partners like ourselves to engage, contract with merchants, or board the merchants, kind of conduct all due diligence, make sure kind of they're legitimate, and kind of pass through the services. So the card schemes provide kind of global reach, global brand acceptance marks, which gives consumer confidence. They provide the technical rails to pass the transactions through between ourselves, who are acting on behalf of the merchants, and between the card issuers, who actually are your banks, right, who kind of hold the money on behalf of the consumers. So card schemes are key partners for acquirers and payment service providers like ourselves. We kind of work really, really closely with them. We work closely on a lot of the new tech, a lot of the new innovation coming out from them. As I said, I was most recently working at Visa on the Visa Direct, so the new kind of push to card solution, and that's something that we've adopted here quite strongly. And I think at the forefront of some of the payment providers in Europe, enabling now consumers to, I bought my insurance policy with my card, I paid for it, and hey, unfortunately I had to make a claim, but they've got my card on file, it's immediately credited back into my account instantly, and all this kind of things. So they're great partners to work with. There are lots of opportunities to new things with, and yeah, not competitors at all.
Perfect, thank you. And this is another question from the audience. It says that this person is wondering how a payment fintech makes profit from its business. I can see you smiling, so I'll go to you, Gavin, if that's okay.
Well, yeah. I mean, our model is based on a transaction fee model. So we're about scaling. About getting lots of orders going through our platform, and taking a very small percentage of that. We don't charge. We actually started off, as many did in our space, but we were at the forefront of it. When we started, there was a kind of a subscription fee. But as we've opened up this to more and more operators, and SMEs particularly getting on board, and really where they are right now, we've removed that subscription fee and made it all about a transaction fee per order. And with the volumes that are now going through, we can do that in terms of charging still a very, very low fee to operators, and keeping a very small amount of that to cover our costs. But with the scale, what we can do is we can offer this service, internationally, all via software. So it's based on the volume that we get going through the platform, and so it's the micropayments kind of model that is all about scale. And it's because of the software behind it. It means it's the same solution really as in the US as it is in the UK or Europe. So it's all to do with volume.
Amazing. And sorry to come to you again so soon, but Moshe, checkout.com has obviously been, it was one of the first fintechs to reach profitability, and did it, I think it was within 15 months of it launching. So what would you say about.
We were fortunate. We kind of bootstrapped since 2012, since we launched and kind of ran profitably. It depends. Fintech is a broad kind of vertical, right? And there are a lot of different types of fintech. So obviously, the payment acquiring space, very similar to Gavin. There's a lot of value we bring for our merchants. So the interchange is actually not something that we would collect. It would go through to an issuing bank or an issuing fintech, similar to like Curve. As a payment service provider, obviously we work with the merchants. We provide processing power, which is kind of a chargeable service. We help them optimize their fraud. We help them increase their acceptance, and all things which can ultimately drive value to their business, which obviously has a value for the merchants, which they're kind of happy to invest in. So again, different sides of the fintech spectrum there.
Amazing. And we've had a question from the audience about the central bank digital currency, which was one of the things that Rishi Sunak mentioned in his keynote speech this morning. So Iana, as head of government and affairs at Innovate Finance, what is your opinion on the CBDC and how do you think it could affect business in the future?
So I think it's so the Chancellor announced a task force that will be sort of set up by the Treasury and the Bank of England to explore this further, and I think this is a really positive step. It's something that was a key recommendation in the Khalifa review, and having worked on the policy and regulation chapter with Kay Swinburne at KPMG and Rachel Kent at Hogan Lovells, we had a lot of discussion with fintechs about central bank digital currency and how it could really benefit what we do. Now, I think there's always a lot of sort of noise around how it fits with Bitcoin and cryptocurrency and a retail CBDC. And I think that is something that will be worked on and will be developed. Like, we can't, again, to use that phrase, the genie is out of the bottle. We're not going back there. And I think the UK really does need to sort of speed up the process, I guess, of understanding what our regulatory framework looks like when it comes to digital assets. But one of the key things that we heard when we spoke to a number of fintechs in the space is that actually there is low-hanging fruit here in a wholesale central bank digital currency. What it needs is the government to just wrap its arms around an idea of how we can really sort of accelerate the idea of this adoption, and put in, the Bank of England exploring or looking at how to put in the rails of this would actually really help to accelerate innovation that's already happening in sort of our financial markets. But it would definitely, I think, provide the UK, it would boost this idea of us being a sort of a global leader. We keep talking about ourselves as a global leader, and we are, but this is something that we can really bring in that will help to accelerate what we do. And I think there's a lot of benefit there from looking at that in some way. So we're really excited to see it. We're really excited to get involved and to get fintechs involved in the discussion too. And we think this is sort of a really great project for the bank to take forward with Treasury and hopefully see something positive come out of it in the near future.
Amazing. And Tom, I'll come to you next. I can see that you've typed an answer, but unfortunately I'm not sure that everyone can see it. So what are your thoughts on the central bank digital currency? You're on mute. Oh, 2020 bingo strikes again.
Cool. So central bank digital currency is pretty much the same technical model as Bitcoin launched with. And the idea of Bitcoin was to eliminate the need for payment networks like Visa, MasterCard altogether. But obviously Bitcoin has become not so much a payment currency as a speculative investment currency. CBDC, I think, rides on the same technology, but aims to provide a stable currency that people can pay with. Now, in my opinion, and I'm a payments guy through and through, so maybe this is not the same as everyone else's view, I do see the main benefit of CBDC as simplifying what happens in the background of payments. So moving monies between payers and payees, or payer and payee banks, in a much more efficient, fast and secure way. That's not really what Visa and MasterCard are set up to do. They're set up to send individual payment messages around the world. So I do see CBDC as being differently focused from the current card networks. Although, as we've seen with Visa and MasterCard, they have now said, yes, we will switch Bitcoin transactions across our networks. And I'm sure that when CBDC launches, they'll be only too happy to do the same with those digital currencies also.
Amazing. And Moshe, I can see you nodding in the background. Do you have any thoughts on the CBDC, or is it something? What do you think?
No, like, yeah, I think it was inevitable. It's you know, I think the future of a digital kind of ecosystem, you know, the closest thing we can have to cash and the maybe the anonymity of cash, but you know, in the digital world, being able to pass that around. So CBDC makes a lot of sense. It kind of removes all the instability that you get with a cryptocurrency like Bitcoin. As Tom mentioned, the card network was announced they're accepting. I think actually Visa is accepting USDC, which is a stable coin. Again, it's not quite Bitcoin, so they'll be very keen to kind of. I think when CBDCs come out, start accepting those as settlement currencies. So let's be clear. This is how issuers or kind of acquirers can settle with Visa backwards and forth. Kind of the wholesale payments, which I think Iana was mentioning. But I think, you know, once it kind of reaches down to the retail level, it'll kind of. I'm really curious to see how it comes into the world of social commerce. So we all know kind of famously what Facebook were trying to do with Libra, which then became Novi and Diem, etc. You know, I think, but I think ultimately a lot of these platforms out there, and I think Telegram talked about it as well. You know, the need for a solution to work in the social area, and you know, we've come out with solutions, you know, where you kind of put a payment link in there, so you can kind of merchants can move into this space, and there's a lot of movement. I think CBDCs is a natural evolution, and I think you know, the players in the payments industry are looking ahead. We have sight of that. We're kind of gearing up for it, and I think it's just excited for what the future will bring.
Amazing. And I think we've got time just for one last question from the audience. This one's from Richard. And it says, businesses like Western Union have enabled people to move money around the world, especially for people without accounts. So surely their whole business model is now under a massive threat now that smartphones are so prevalent. I'll come to you, Gavin, where I haven't asked you a question in a while. And this one's all about digital smartphone payments. So what are your thoughts?
I wouldn't want to comment on Western Union particularly. Not really my field, but I think, you know, every company at the moment would have had a mobile strategy for some time. So without wanting to get into what their business model is like, I know they've been putting mobile first for, you know, a long time. So it's going to have an impact on everything. It's probably the most diplomatic thing I can say about it. Is that, you know, it's everyone is reacting to it in different ways. So it's the move to mobile has been coming for a number of years, and it's not like the pandemic has suddenly just overnight made something happen that wasn't already coming. It's just sped it up. So every business, whether it is, you know, transferring money or it's hospitality, like I work in hospitality tech, is all impacted, and there are, you know, people been looking at how mobile will change that business model. So I think it's not just businesses like that. Everything is being changed by mobile, but the smart businesses are reacting and putting mobile first.
Amazing, thank you. And we do have one last question that's just come in, which is, has the pandemic put any positive or negative impact on your international expansion? I actually come to you, Tom, because I know that Curve recently rolled out across Europe during the pandemic. So I can imagine it's only had a positive impact on your international expansion plans.
I can't say that COVID has been positive for anyone, but certainly
no, sorry.
we took a decision early on in the pandemic. Should we retrench, cut down, wait for things to blow over and then move ahead, or shall we just push ahead? And we decided we'll just go for it. So as you say, we've moved ahead in Europe very successfully. We are planning to launch in the US this year. And even though we saw a hit in our revenues in March of last year, since then we've experienced very positive growth over the remaining period. So yeah, certainly for us, the pandemic hasn't held us back, thank goodness.
Amazing. And I think we've got time. Just a quick fire question to you all. I'll come to you first, Moshe. Has COVID-19 changed the way that we pay permanently here in the UK?
I think it's accelerated a movement that's already been happening. Yeah.
Iana, I can see you nodding. Another quick fire question to you. Yeah?
Yeah, I was going to say, I think Moshe got in first. It was already happening, but like the last 12 months, we've seen exponential growth.
And Gavin, same question to you. Has it changed the way we pay?
Yeah, I mean, I think we're all going to agree. It's 100% agreement on that. That we all knew it was coming. It's probably made 5 to 10 years of development happen in 1 year, and it's just increased that familiarity from businesses and customers. Customers was something that was going to come anyway. But yeah, it has changed it because it won't go back now. But it has sped up that change.
Perfect. And Tom, really quickly, just in the last couple of seconds.
Yeah, we already saw that cash was dying. It's now taken another nail in the coffin. Contactless on the up and up, digital payments on the up and up. Yeah, we're not going back to where we were before the pandemic.
Amazing. Well, unfortunately, I think that's all we've got time for today. Thank you so much for joining us. I hope you enjoyed it just as much as we did. Be sure to check out the remaining panels this week. And in case you missed it or missed some of this one, don't worry. All of the webinars are recorded so you can rewatch them immediately. Enjoy the rest of FinTech Week. Bye.
Bye-bye.